Are you a residential property investor looking for an easier way to pick up your next rental property? What if we told you there was a loan program that has no tax return or personal income requirements and that the program was flexible for investors just like you? Then it's time for you to get to know our DSCR Investor Cash Flow Loan Program. This program is designed for residential property investors who are looking to avoid the red tape and endless piles of paperwork of traditional bank loans while also avoiding those aggressive hard money interest rates and terms. Here's how it works. Unlike a traditional conventional loan, there are no tax returns and no mind-boggling explanations about your other investment properties. Instead, we use the monthly rental income for the home that's being financed as the income for the new loan. And then we compare it to the home's traditional expenses, such as property taxes, insurance, and association dues. We take the rental income and divide by the expenses. This results in a ratio that we use for qualification, known as a debt service coverage ratio, or DSCR for short. Here's a breakdown of how the process works. First, we order a standard residential appraisal of the home by a licensed real estate appraiser to determine the market value of the home. Now, what sets this program apart is that we also order an additional report called a market rent analysis, which provides information about the average market rents of similar homes in the same marketplace. This rental figure then becomes the income for the new loan. Next, we'll calculate the standard expenses for the home, including things like property taxes, property insurance, along with any required association dues. And then finally, we'll take the rental income and divide it by the expenses. The resulting number is known as the debt service coverage ratio, or DSCR ratio for short. If the ratio is 1.0, it means that the property breaks even each month. We call this neutral cash flow. If the ratio is higher than 1.0, then it's making money each month, or positive cash flow. It means that the property is turning a profit each month. And then if the ratio falls below 1.0, then the property is losing money each month, or negative cash flow. The ideal ratio should be 1.0 or higher. The higher the number, the more the property cash flows and the more profitable it is from an investment standpoint. Here are some features and benefits for the program. These are 30-year fixed-rate loans. There's no PMI regardless of your down payment. The occupancy is designed for investment homes only, so the borrower may not occupy the home. You can use this program to finance a wide variety of residential property types, including single-family homes, townhomes or villas, 2 to 4 unit multi-family homes, 5 to 8 unit residential properties, condominiums, non-wardable condos, condotels, and even adult care facilities. Prepayment penalties are standard for this type of loan and range from 0 to 5 years depending upon several factors. Longer prepayment penalties can improve the overall terms of the loan, and if desired, the prepayment penalty can be bought out entirely or reduced with a one-time fee paid at closing. Your loan originator can help you determine the best structure for your goals. Short-term rental income on the appraisal can be used on a case-by-case basis for properties that are better suited to short-term rental income potential. You can close in the name of your LLC or other entity, and we offer loan sizes ranging from $100,000 all the way up to $3.5 million. Here's what you'll need to know to qualify for the program. First, you need to already own your own primary residence. If you rent, this can be considered on a case-by-case basis, but you will need to prove a solid 12-month rental history for your own place. And note that living rent-free is not considered acceptable. For experienced landlords, you'll need a down payment of at least 15% of the purchase price. First-time landlords will need a down payment of at least 20%. You'll need to provide at least 2 months of your bank statements showing that you have sufficient funds for the down payment and settlement charges. Verifying additional funds for reserves may be required for scenarios involving DSCR ratios that fall below 1.0, as well as applicants with lower credit scores and possibly first-time investors as well. Minimum credit scores can be as low as 575. And of course, we'll need an application, which is available online on our website. Want a fast way to see if a property will cash flow? Use our free DSCR calculator to run your own scenarios to quickly determine the cash flow potential of any home. Scan the QR code or click the link in the description below to try it out today. So if you're ready for an easier way to finance your next investment opportunity without the headaches, check out our DSCR Investor Cash Flow Program. Give us a call or click today.